Hello everyone and welcome to TND Network's channel. Today I will introduce you to Bitcoin ETF. Let's get started. What is Bitcoin ETF? If you register an account using my link, you will receive promotional offers from TND Network. Your registration will also help us to produce more valuable videos. The approval of the Bitcoin Spot ETF by the U.S. Securities and Exchange Commission, SEC, on January 10, 2024, marks not only a victory for Bitcoin, the king of cryptocurrencies, but also heralds a new era for the crypto world. This unexpected victory makes it easier for you to buy Bitcoin, as you can now buy it through familiar stock exchanges, without having to worry about managing a digital wallet. ETF stands for Exchange Traded Fund. Basically, an ETF operates by tracking the price movements of the underlying asset. This could be gold, silver, or stocks, etc. Therefore, a Bitcoin ETF would be based on the price movements of Bitcoin as a reference. In simpler terms, the price of the ETF would closely follow the price of Bitcoin on the market. ETFs combine the characteristics of an investment fund with those of a regular stock, as they are listed and traded on traditional stock exchanges. This means that there are regulations governing trading, and investors participating in trading will be protected by law. This is very important because it is one of the advantages of Bitcoin ETF. Some current Bitcoin ETF products. Based on the characteristics of this asset, we can divide Bitcoin ETFs into two main types: futures-based and spot-based. Futures-based. Bitcoin ETFs are investments in contracts that agree to buy or sell a specific amount of Bitcoin at a predetermined price on a future date. This allows you to track the performance of Bitcoin without actually owning it. Spot. Bitcoin ETFs are fund certificates of an investment fund that owns Bitcoin and trades on traditional stock exchanges. The fund will invest directly in Bitcoin and hold real Bitcoin, not through futures contracts like Bitcoin futures ETFs. You can buy Bitcoin ETFs directly on reputable exchanges like NYSE and NASDAQ. Advantages and disadvantages of Bitcoin ETFs. Advantages: convenience. Bitcoin ETFs were created to make it easier for many people to invest in Bitcoin without requiring extensive knowledge of blockchain technology or complex procedures involved in purchasing actual Bitcoin on cryptocurrency exchanges. Portfolio diversification. A Bitcoin ETF can include various other assets such as gold, Apple stocks, etc. This feature allows investors to diversify their portfolios and hedge against risks associated with investing in a single asset or a small group of assets. Increased liquidity, tradable Bitcoin. ETFs attract a new group of investors, including institutional investors, who can indirectly participate in the cryptocurrency market. Addressing regulatory issues. Some institutional investors, like pension funds or asset management companies, may be restricted from directly investing in Bitcoin. However, with Bitcoin ETFs, they can gain easier access to Bitcoin without holding it directly. Security. For investors inexperienced in the crypto market, using Bitcoin wallets or cryptocurrency exchanges can pose high risks of loss due to hacking, forgetting or disclosing private keys, and not knowing how to use wallets. Tax optimization. In countries with crypto regulations, such as the US, direct investment in Bitcoin may be subject to higher taxes than trading ETFs as a type of stock on the stock market. Facilitating approval of other crypto ETFs. In the future, there could be more ETFs related to other cryptocurrencies, attracting more investors to the crypto market. Disadvantages. In addition to the advantages mentioned above, Bitcoin ETFs also have some potential drawbacks. Management fees. ETFs typically charge annual management fees for the services they provide, compared to the one-time or even 0% fees when trading on some cryptocurrency exchanges. Owning shares in a Bitcoin ETF can lead to higher management fees over time. Trading hours. The crypto market operates 24/7, allowing investors to participate at any time. However, Bitcoin ETFs will only trade during the opening and closing hours of the stock market. Loss of immediate payment functionality. While Bitcoin can be used as a means of payment in some countries, Bitcoin ETFs cannot be directly used for transactions. This lack of immediate payment functionality can be a drawback. Price discrepancy with actual Bitcoin value. ETFs track the prices of a managed group of underlying assets. As a result, the price of an ETF may not always perfectly match the net asset value of the fund. The importance of Bitcoin ETFs. Bitcoin ETFs are essential for several reasons. Specifically, these include institutional acceptance. The introduction and acceptance of Bitcoin ETFs have significantly contributed to the organized use of cryptocurrencies. They are recognized as a financial product, providing a secure investment vehicle. Bitcoin ETFs offer a safe investment option for those who prefer not to directly hold the underlying asset, attracting institutional investors to the crypto market. Here are the top Bitcoin ETFs to keep an eye on in 2024. Currently, there are 11 large funds offering Bitcoin ETFs for you. Depending on the fund, there will be different management fees. You can choose the fund that suits you. Grayscale Bitcoin Trust, Hashdex Bitcoin Futures ETF, Valkyrie Bitcoin Fund, Invesco Galaxy Bitcoin ETF, Wisdom Tree Bitcoin Trust, Fidelity Wise, Origin Bitcoin Trust, BlackRock's iShares Bitcoin Trust, Franklin Bitcoin ETF, ARK21 Shares Bitcoin ETF, VanEck Bitcoin Trust, Bitwise Bitcoin ETP Trust. The future of spot Bitcoin ETFs. Despite some underlying challenges, such as market manipulation or the impact of Bitcoin halvings, obtaining SEC approval for Bitcoin ETFs is a significant milestone for the crypto industry and provides mainstream recognition for the blockchain field. If you are considering investing in Bitcoin ETFs, it's essential to remember that risks related to the cryptocurrency market still exist and may even be higher than with futures. Therefore, having a long-term trading strategy with stop-loss plans is crucial for risk management. And above are all the information that I have shared with all of you in the video today. I hope you will receive more value from this video, and also don't forget to like and subscribe to the channel to receive more valuable videos in the future. And if you have any questions, please leave a message in the comments section, as well as suggestions for us to develop even more. I wish you all successful registration, and see you in the next video of TND Network. Goodbye and see you again.